Time for our ETF Spotlight. Mike Santoli taking a look at Wall Street's quality trade and what that means for investors. Mike?
Yeah, Carl, in fact, this trade's been going on for a while now, not just with the tough times in September that hit with the market, September and October. Quality, as Wall Street describes it as a style factor for investing, does not really mean value. It doesn't strictly mean defensive stocks, but kind of those things are bundled in there. Basically, strong balance sheets, financially secure margins, things like that, steady businesses, old blue chips. So look at the couple of ETFs that track this style. QUAL, JQUA, they've been around a while. They've outperformed the S&P 500 modestly in the last month or so. And I think you're starting to hear Tobias Lefkowitz, as a matter of fact, this hour, talking about how he thinks it makes sense in a more volatile market to kind of hew in this direction. Tech is pretty well represented in these style indexes, though. It's not just about getting out of tech and going into cheaper stocks. So Starbucks, Apple, Visa, Pfizer, healthcare is up 11% year to date. That is kind of a quality trade. So what does it mean? Well, partially it means the market's kind of hunkering down for tougher times, for some kind of a slowdown. It's not to say the market has it correct, but before a bear market, this is kind of the way the market acts. It gets more defensive. It kind of goes to those areas that are not going to be as dependent on liquidity and cheap debt. So that's what we're seeing.
For a long time, you were willing to give the market the benefit of the doubt. Is that wearing thin?
I think it's on a shorter leash. I do think so. I mean, last week's bounce was, I think it's just a bounce. It stopped exactly where textbook you said it would stop. But I don't think it's, look, we're still up like 3% year to date. So I don't think the S&P has kind of told you it's game over. But obviously the market's been chewing through these issues here. And I think the most bearish thing you could say is there's been so much good news this year. 20% profit growth, $1 trillion in buybacks, a tax cut.
Cuts.
And we're up 3%.